Believe it or not, we are early investors in blockchain. Trillions of dollars will definitely flood this space in the future.
Ever get tired of working for a living?
Every damn day. But I've got a nasty addiction called money, so I do what I do.
This would just be a follow-up video from my previous one, which was bigger than Bitcoin. This is on Chainlink. And the more information that I find, I'm just blown away. Chainlink data feeds provide secure and reliable access to real-world data sources that smart contracts need to function correctly. This allows smart contracts to access off-chain data such as market prices, weather conditions, or other external events that can impact the contract's outcome. By integrating Chainlink's data feed, smart contracts can execute more complex use cases and unlock new possibilities that were previously impossible. Now, I'm going to go down this rabbit hole of information on links so you can see how big this project really is, just to say the least. Chainlink price feeds go live on Base, which is Coinbase Layer 2 testnet. Web3 services platform Chainlink's price feeds have become available on the Base testnet, the Ethereum Layer 2 blockchain incubated by crypto exchange Coinbase, allowing developers to access external data so that the smart contracts that underpin DeFi can execute based upon the information retrieved. Base will also join Chainlink's Scale program, which covers certain operating costs of Chainlink services. The program was introduced in September to reduce developers' costs. As previously mentioned, leading blockchains join Chainlink's Scale program. Participating in Chainlink's Scale program are a number of on-chain ecosystems including Avalanche, Metis, Moonbeam, and Moonriver. Moonbeam and Moonriver also operates on the Polkadot ecosystem. Chainlink Scale program, sustainable Chainlink access for layer 1 and 2 enablement, a Chainlink economics 2.0 program centered around accelerating the growth of blockchain and layer 2 ecosystems while increasing the economic sustainability of the Chainlink network. Chainlink Scale allow blockchains and layer 2 networks to fast track smart contract innovations in their native ecosystems by covering operating costs of Chainlink's Oracle network for a period of time. In doing so, their developers get access to a variety of important Oracle services, which can include configurations specific to their ecosystem needs, such as data feeds with higher update frequencies to enable more advanced and low latency smart contract applications. Chainlink help grows blockchains via Oracle services so their dApp ecosystems can power real-world use cases that generate value. Ultimately, Chainlink Scale aims to generate more economic value for each participant in Web3, blockchains, dApps, Oracle service providers, and users, while also transitioning the entire stack towards a more sustainable economic model. This is not as technical as some people may think it is. In layman terms, Chainlink is trying to help other projects grow, and when those projects grows, Chainlink's ecosystem continues to grow as well. This article is from 5 months ago. Now I'm going to read a couple key points in this, and then I'm going to move forward, and I'm going to wind up coming back to this article. You're going to see why. Swift is partnering with Chainlink. Here's the download on the blockchain data provider. Chainlink is working with Swift on a proof of concept where it is exploring using the protocol's cross-chain interoperability protocol to help the interbank network communicate and transfer tokens across all blockchain environments. Swift is an interbank messaging system that connects banks and enables cross-border payments. Why would Swift partner with Chainlink? If banks wanted to interact with blockchains without using Swift, without using Chainlink, That will take years and a lot of overhead costs, and there's a lot of regulatory oversight. Whereas together, they can combine their networks. All right, this article is from September of last year. Just hang in there with me. We're going to get to some good stuff in just a minute or two. This is their build program. Rather than spending valuable time and resources building Oracle infrastructure from scratch, developers that integrate Chainlink have been able to accelerate their go-to-market timeline and focus internally on their application's core business logic. For DeFi applications in particular, a Chainlink integration for market data helps increase users' assurance in the dApp's security and reliability. For example, Aave joined the Chainlink ecosystem during its pre-launch stage and received technical support when integrating Chainlink price feeds as a price oracle solution for its decentralized lending protocol. This cross-ecosystem collaboration enabled Aave to successfully support 16 crypto assets at mainnet launch, a record number at that time in DeFi. Chainlink is part of this whole composability idea. It's vital. That's a quote from the founder and CEO of Aave. All right, this article is from 2 weeks ago, March 22nd. PwC Germany partners Chainlink Labs targeting enterprise blockchain applications. Chainlink Labs, the founder of the Chainlink blockchain Oracle network, is working with PwC Germany as an integration partner to encourage enterprises to launch blockchain applications mainly on public blockchains. PwC Germany and Chainlink Labs aim to help accelerate enterprise adoption of blockchain technology in key enterprise sectors such as capital markets. While regulators seem hesitant about public blockchain, there's certainly interest from enterprises, particularly applies to tokenization. Even institutions such as JP Morgan and Singapore's DBS Bank are trialing permissioned solutions on public blockchain under the oversight of the Monetary Authority of Singapore. BlackRock CEO touts tokenization, warns U.S. lagging in innovation. Once again, you see the word tokenization. Other prominent financial institutions like Goldman Sachs, Hamilton Lane, and Siemens have already piqued investors' interest by undertaking their own distinct asset tokenization projects. In fact, Hong Kong's government tapped Goldman Sachs' tokenization protocol to issue its first tokenized green bond. If you're not familiar with BlackRock, they're the big boy on the block. Assets under management, $10 trillion. Let that sink in. The potential for tokenization via blockchain is approaching an inflection point and could reach up to almost $5 trillion in value by 2030, according to a report from City GPS. Almost anything of value can be tokenized, and tokenization of financial and real-world assets could be the killer use case blockchain needs to drive a breakthrough, added the report. We forecast $4 trillion to $5 trillion of tokenized digital securities and $1 trillion of distributed ledger technology-based trade finance volume by 2030. Private market tokenization is expected to reach $4 trillion with another $1 trillion from the repo, securities, and financing and collateral markets by 2030. Mass adoption is expected to be 6 to 8 years away, but City GPS said momentum on adoption has shifted as governments, large institutions, and corporations have moved from investigating the benefits of tokenization to trials and proof of concepts. Okay, this leads back to the Swift and Chainlink partnership. Remember, Corporations have moved from investigating the benefits of tokenization to trials and proof of concepts. Chainlink partnership. Chainlink is working with Swift on a proof of concept. Now, this article is from the City GPS from a week ago. And who is City GPS? Of course, they are tied to Citigroup. And they've been talking about digital disruption, how fintech is forcing banking to a tipping point back in 2016. So we're talking 7 years ago for Citigroup looking into this. And this is City GPS, Global Perspective Solutions. And how big is Citigroup? Citigroup total assets, $2.47 trillion. How much more proof do you need that trillions are coming to this space? We are front running Wall Street right now, and the masses don't even have a clue. The government and big banks know for sure. That's why they do not want us to be in this new asset class.